Hello friends, this is Dr. OG Crypto here, your mentor and tutor for your trading journey. I'll be introducing you to the best forex and crypto trading course for a total newbie or an amateur or a professional trader. My goal for creating this course is to make it for free and make it even more relatable, understandable and better than any trading course that you can get for $1,000. So in this particular video, I'll be introducing you into supply and demand zones. So this particular aspect is very important. This video is very important, and I will love you to take it very seriously and be jotting things down. So I'm sure like by now you are with your pen and paper and you are somewhere alone where you can actually grab everything that will be pouring out for you in this particular video, because this video is very important. It's like it contributes 60% of everything you need to know about SMC. So now, supply and demand zones, that is supply and demand zones, they represent like a zone or an area on the chart where you can actually buy market from or sell market from. That is, they represent where you can long from or where you can short from. You understand? So that's why it is very important, because what is the essence and purpose of you knowing how to understand the chart? The chart is communicating with you, but you can't take a trade. You can't make profit from the market. There is no point. You understand? So now, these supply and demand zones, there are various supply and demand zones based on different strategies. Like for a retail trader now or a traditional trader, now the way they trade is buying from support and shorting from resistance. There are some people that they use indicator. So the indicator will tell them once, for example, Bollinger Bands that have all the upper band, lower bands. So one market get to upper bands, they are going to short. Once market get to lower bands, they are going to long, and so on and so forth like that. Same thing for SMC. So for the supply and demand zones for SMC, they are basically three. They are basically what? Three. We have order blocks, we have breaker blocks, and we have fair value gaps. We have order blocks, breaker blocks, and fair value gaps. These three supply and demand zones, actually they are divided into two, or we can say they have two types. Like for order blocks, we have bullish and bearish. We have breaker blocks, we have bullish and bearish. Fair value gap, we have bullish and bearish. Now, what it just means, this bullish and bearish, is that if I see a bullish order block now, what it means is that it is an order block that I can use to long the market. If I see a bearish order block now, what it's telling me is that it's an order block that I can use to perform a bearish trend, that I can use to join the market within a bearish trend, that I can use to short the market. I hope you understand it now. So now these order blocks, now you have to understand it very well, because once you understand this order block very well, to understand breaker block will be very seamless, because order block breaker block is like an opposite of order block, or let me say a breaker block is an order block that failed. Do you understand? So let's say this is an order block now. Then in case instead of the market to respect this order block, the market did not respect it, the market just break it, then it will turn to a what? To a breaker block. I'm sure you understand it now. Then when we say fair value gaps, just from the name, gap. So there are gap in the market. We see where, because normally the way the market is supposed to be behaving is that when you are seeing a buyer, you'll be seeing a seller. Like let's say 50 people come into the market, 50 buyers come into the market. Therefore, for the market to be balanced, 50 sellers are also supposed to come into the market. But in a situation whereby there are 100 traders total in the market, then 90 of those traders are buying, while 10 of those traders are selling. It means that the market is short. The entire market, the overall market is short of what? 80 traders, 80 shorters. So therefore, the market will look for a way to go and balance that gap, that void that was created. So that is what order fair value gap is all about. So I'm sure by now you already understand what order block is, what breaker block is, and what fair value gap is. So for your further understanding, I broke this course down in a way that you are going to understand it very well. So I use normal school method where I wrote some things down. So I will be sharing it with you now. So now, when we say order blocks, What are order blocks? Once you understand this order block very well, you'll be able to understand breaker block too. Very, very simple. So an order block is a price area on the chart where strong buying or selling happened just before a sharp move. That is where strong buying or selling happen. That's where we refers to as what? Order block. Most of the time we use it in SMC or ICT trading. You understand? So traders pay attention to these order block zones because price often reacts when they return to them. So meaning that, let's say market has gone up. So once it creates an order block at one point, one thing that you must know is that whether we like it or not, price always find a way to react or come back to that place when they get to that place. So let's say market was going up. In this case, let's say market was going up. You see market was coming down. Then it creates another block here. One thing you must know is that whether you like it or not, the market will find a way to go back to that place. When you get to that place, the market will react to that place back. So that is what order block is about. Very, very simple. Very, very simple. So this is what a lot of people are collecting $1,000 from you for. I also paid around $1,250 to actually learn everything about this order block and SMC concept as a whole. So these areas often form where there is sufficient activity to take large orders without pushing prices too far. For retail traders, order blocks simply help highlight where the market reacted before it may change and where it may react again. You know, we retail traders, I already established the fact that we are retail traders in the sense that our money is small. So the real market makers are the smart money. That is the banks, the financial institutions, the central banks, the equity trader investment firms, and so on and so forth like that. They are the one making the market. They are the one that will say, oh yeah, let us sell this market. So in the process of them selling, and I told you the other time that they sell at specific points, they buy at specific points. So those specific points is what we retail traders that want to trade like them, we have to be looking out for. And those specific points are most of the time called what? Order blocks. So before they create this impulsive move like this that you saw, they've already created a particular point which we refer to as order block. It's just like an hint or like a memory for them that, okay, we created something here. We want to buy. But before they buy, they will first create a memory down so that they will know that, okay, this is where they are buying from. So once they created that buy, the market will now come back to that place where they buy from. So that is where we want to enter from. Because those whales, those investment firms, those market makers, those big boys in the market, they actually have memory. They will know where they buy from. Because if it be because, okay, they saw that, okay, supply and demand are equal at that point, oh yeah, let us buy. So once market gets to that place again, they are going to buy again. Or there are some times that market might not fill all their orders. So once market come back to that place, of course, market will now buy back again. So our own logic as a smart money concept trader is that, okay, we understand that when they want to enter the market, they enter with large capital. And because they enter with large capital, there are sometimes the market will not be able to take all their orders, to fill all their orders before market will move impulsively from that place. So, but when the market is coming back to that zone, that's when we will want to enter with them too, and we will now make profits, unlike other people that they will now hit stop loss. So that is what order block concept is basically all about. You understand? So by the way of definition, we can say an order block. By way of definition, we can say an order block is the last bearish or bullish candle before an impulsive move that did break of structure. So look at the terms. I want you to take note of the terms. The last what? The last bearish or the last bullish candle before an impulsive move that did break of structure. So that is what an order block is. So an order block is the last bearish or last bullish order candle before an impulsive move that did break of structure. That is what the definition of order block is. You understand? So they are usually a short candle. They are usually a short candle before the major move. Now, I say you already know what bearish candle is and you already know what bullish candle is. You understand? So now, when I now say what is a bullish order block, because we have two types of order block. We have bearish order block and bullish order block. So what is a bullish order block? So a bullish order block is the last bearish candle. Let me not confuse you guys. Let me use green. Last green or last red candle. Let me use that one. So if I say we have two types of order block. Bullish order block. Now, what do we use bullish order block for? We use bullish order block to long the market. We use bullish order block to long the market, right? We use bullish order block to long the market. Therefore, that's the last red candle, the last small red candle before the impulsive green candles that did break of structure is referred to as what? An order block. For instance, look at here now. You can see that this is the last red candle before the impulsive green candles that did break of structure. So I can refer to this place as a what? As an order block. So I will mark it out with a rectangle. I will mark it out with what? With a rectangle. Can you see what happened? You see that the market actually respected it. If you like, you can use this one. If you like, you can use this particular one. Can you see that the market came to come and respect it? Can you see that the market came to respect it, to pick the other blocks, and the market went up? Do you get it now? So now, what of a bearish order block? A bearish order block is the last green candle. The last green candle that you can see. You can see, I can see a last green candle now before what? Before an impulsive move. This is an impulsive. When you say something is impulsive, it means it just printed hard candles with large bodies. You understand? With large bodies. That is what refers to as impulsive move. This is an impulsive move. This one also is an impulsive move. This place like this. You can see that's an impulsive move. You get? That did what? Break of structure. You can see that there's a break of structure because this is the low we know before. It has broken it. So before that did break of structure. So this is an order block. I'm very sure you now understand what bearish and bullish order block is now. So that is that. So we use it very well. So look at it now for your more understanding. So in a bearish scenario, that is the market is selling. In a scenario that the market is selling, the last green candle before those impulsive moves that you are seeing that now did a break of structure is what refers to as what? A bearish order block. So we use this one to short the market. We have that hope and we have that mindset, and we already know that in the case of forming this one, there is a place that the market cannot fill all the orders of these market makers. Therefore, the market will retrace back to that zone. So by the time market is retracing back to that zone, we will place our entry here for us to sell with them too. You understand? So the last bullish candle before a sharp and substantial downward movement is referred to as a bearish order block. Now, what of a bullish order block? A bullish order block is what? The last bearish candle, that is the last red candle that was formed before the impulsive green candles that was formed that did a break of structure are referred to as what? Bullish order block. Do you understand? So those are what order block is about. It's as simple as that. It's very, very simple. So let's look at this one once more. So now I said a bullish order block. A bullish order block is a price area where buying showed up before a strong move. This is just like a more explanation for you so that you can understand it. You can pause the video and read more about what I'm trying to talk about. So when price come back to this particular area, it may slow down or bounce back up. Let's say, for instance, the market is buying So when the market is buying to the upside and it did impulsive move to the upside, so before it did that impulsive move, it will have created a small red candle down. So when market is now coming back to that place, the market will bounce back up. So that's why people, traders often should see this particular bullish order block as a what? As a potential support zone. What do we use support for? To long the market back up. Do you understand now? Do you get me? So let's look at this example again. You see the last green candle before the impulsive move. So we are expecting that the market will come back here and will sell. The last bearish candle, red candle, before the impulsive move that did break up structure. So we are expecting the market to come down back to this place and we will now long. Do you understand? So that is what order block is all about. So let's look at a real life example. So for a real life example on the trade on the chart, you see that this is the previous low that we know before, but you see that the market broke it down. So there's a break of structure here. So you will now go and check what was the last red candle, green candle that was formed before this impulsive red candles that was forming. So that is the order block. So if you mark this place as the order block, you see that the market find its way to go back there. So as the market got back to that zone, what happened? The market sold again. Do you understand? The market sold again. So you can make profit from here like this. So this second selling that the market did is a profit for you. Do you understand? That's a profit for you. Let's look at more example. Now look at it. This was the previous low we know before. Now the market went up and came down. So in the process of coming down, it broke the previous low that we know before. So there's a break of structure here. So the last green candle that was formed before all these impulsive red candles that are being formed is what we refer to as what? An order block. And what happened? Can you see that the market, when the market got to that zone, that area again, what happened? The market sold impulsively. Can you see profits that you will have made? Let's look at this example too. Now, this was the low that we know before. This was the low we know before. Now, what happened? The market now broke it impulsively. You can see the impulsive breaks like that. So it break it. So therefore, it's telling us that there's a break of structure here. So you are going to carry the last green candle that you can see there before the break of structure, the impulsive move that did break of structure. So what happened? You can see that the market finds its way to go back there. As it reached that zone again, what happened? The market sold. Do you understand? So that is how break of structure, that's how order block works. So this is a bearish order block now. So the last green candle, that's what you'll be looking at for. The last green candle before the what? Candles that did impulsive move to the downside and did a break of structure. I'm very sure you now understand how to trade order blocks now. You now understand how to trade order blocks. So let's check more example on the live chart. I actually took these two trades on BTC recently. So I did not remove the chart because I want to come and use it to explain to you guys. That's the reason why I didn't remove it. So if you look at this trade now, if you look at this my trade that I took, which day was that? On Monday. Yeah, on Monday. Okay, I look at it. Okay, I said market did support, resistance. I was able to mark my support, mark my resistance. This is my support, this is the resistance. Then this support, this is the support. What happened? The market broke it. Immediately the market broke it. I'm saying, okay, we are now in what? Downtrend. This one has confirmed to me that we are in downtrend, right? So it forms a low. So there's a break of structure here. There's a break of, though there's really no break of structure here because the impulsive move are not really clear. You understand? It was just chopping. So there's a break of structure. Now, I now say, okay, since there is a break of structure already and there was an impulsive move to the downside. So the last green candle that was formed before the impulsive move, then I now mark it out. So what happened? The market came back there and the market sold. Can you see profits? So that is that. Do you see? So that's how I sold the market. That's how I made profit. I made 1:3 RR on this trade. So meaning that if what I just did, I respected the previous low that was formed. Week that was formed. So I can place my stop loss a little bit here. What happened? So 3.7 RR. So meaning that if I risk $100, I will have made $379 on that trade. Now look at this place too. You see that the market was journeying up, was going up, going up, going up. So it formed this high, then it came down, then it formed an impulsive move. So the impulsive move actually did a break of structure. So I noticed that, then I picked the last red candle that was formed. What happened? Can you see that the market later came back there and the market bought immediately? Like it bought very, very well, impulsively. So I made 1:7 on this trade. So I risked, I think, $50 on this trade, and I make like $350. So that is it. I think 350 or 370 something dollars with $50. So that is it. So can you see how order block works now? So that is what order block is all about. But now there are now rules to trading order blocks. It's not all the red candle, all the green candle that you are seeing that you'll be saying, oh yeah, let me take it. This is another block. No, there are features of a tradable order block. It's not order block that you trade. You understand? So one of it is that it must follow the trend. You must make sure that you are following the trend. So if we are in downtrend, you see that we were in downtrend. That's the reason why I look for a short opportunity, and I short the market. You understand? You see that because I know that we are in downtrend, I didn't try to, because this is another block too. This one too is another block. But we are in a down market. I cannot start saying that I want to be longing. You understand? So you look for what? A one with what? Downtrend. So can you see that we are in what? We are in uptrend. So therefore, I went to look for a what? For a long opportunity. You understand? So you must follow the trend. It's not every other block that you see that you want to trade. Every other block you spot you want to trade. No, you have to follow the trend. Number two is that there must be a preceding fair value gap. So what does fair value gap means? Fair value gap, I said, let's say 100 people are in the market. 100 people are in the market. So now out of those 100 people, 10 people are sellers, while 90 people are buyers. So it means that the market is short of what? Is short of 80 people. So that those 80 people, 80 sales is the gap, and the market needs to close it. So in the process of closing it, the market will hit my order block and the market will sell. So order block, when we are considering fair value gap, we consider 3 candles, most especially where there is impulsive move. You can see that there's impulsive move here. So you will now consider the second candle in the 3 candles you are considering. So if I consider this one as candle 1, candle 2, candle 3, so you can see that in between the candle 1 and before candle 3 2 forms, I can see that there is small fair value gap here. You understand? Look at here too. You can see that if I consider this one as candle 1, candle 2, candle 3, in between them, you can see a large gap there that the market needs to go and fill. You understand? So whether you like it or not, the market will go and fill it. You understand? So you see that as the market went down, later on it went to fill it. You understand? So now for this other block that I traded now, you see that there was a preceding fair value gap. If I consider this one as candle 1, candle 2, candle 3, you can see that between candle 1, candle 2, and candle 3, if I consider it to the second candle, you can see that there is a large gap there. You can see that it was not formed. It was not like there is no candle in between them. But what happened? The market later came back to that zone, and the market continued its movement. But later on, once I saw it like this, then I said, okay, what happened? The market later came back there to my order block, and the market sold. Sorry, I want to reply somebody. 8622. So that is what fair value gap is all about. Do you understand? So you consider where there is impulsive moves, then you will now consider 3 candles from there. So look at this. This is the color of the candle does not matter. So I want to see if there is a preceding fair value gap. This is candle 1, candle 2, candle 3. You can see that there is a gap here that needs to be filled, a large gap. That place, if I consider candle 1, candle 2, candle 3, you can see what happened. The market filled it. In the process of filling it, it tapped my order block and the market went back up. So there must be a preceding fair value gap. You understand? So another thing is that there must be a break of structure. You can see In all the examples I gave you, there's what? There was break of structure. There was what? Break of structure. So there must be a what? A break of structure. Number 3 is that if you spot a higher time frame order block and a lower time frame order block, you should take that of higher time frame order block more serious than that of what? Than that of lower time frame order block. You understand? So now another one is that what? You must trade it if you see an order block below support, like a bullish order block below support or at support, then you should take it. That's a example of a good order block, a tradable order block. Look at, for instance, now you can see that this is a support. This is a support. What happened? You see that there is another block below a support. So I took that's more of the reason why I say, okay, this is a strong order block for more confirmation. And what happened? The market came back there and went up. But if at all I saw an order block, let's say this is the support I drew, I now saw another block around this place, I will not take it. Do you know why? Because what if the market is going for the support? So yeah, for you to see that this is a strong order block, or a tradable order block, a valid order block, you must see it maybe it's sitting on support or below support. But if you see it above support, you don't take it. You understand? So look at this one too that I took. You can see that this is a support already. It's a zone, a valid zone, a key zone, an important zone. Then the market has broken that support. If market break a support, it will turn into a resistance. You understand? So I can see an order block above a resistance. So it's telling me that, okay, I can actually take this particular trade, and I took it and I made profits. Do you understand now? So that is that. So another thing is that what? You must trade with logic. You have to be trading with logic. You have to be trading with reasoning. You have to be trading like a human being that has brain. Not that, okay, every other block that you see or you spot, you trade. Every other block you see, you spot, or you spot, you trade. No. Do you understand? You have to be reasonable that, okay, I can see that this other block, okay, we are going up, I can see another block in that going up, then you take it. You understand? It's not that every other, you have to be adamant that once I see other block, I will take it. No, you have to be reasoning. Okay, there's a break of structure there, there's fair value gap there, okay, it's sitting below support, okay, I can see, I saw it on a higher time frame, and so on and so forth like that. Then you take it. You understand? So that is what order block is all about. So that is what order block is all about. So now, what of breaker block? What of breaker block? So now, in a situation whereby when the market is coming, the market did not respect that order block at all. If the market did not respect that order block at all, let's say market is coming like this, it's coming, then the market is supposed to respect this order block that is there, but the market did not respect it, it just break through. That is a what? That is a breaker block. That is a breaker block. I think I did some write-up concerning that. I don't know why I'm not seeing it. So that is a what? That is a breaker block. Once you see that the market is coming, the way it's coming, it did not even respect it at all, it shows you that it's a breaker block. Let me see if I can see. Okay, I can't see it. So sorry, I was replying somebody. So now for breaker block, the way breaker block works is that where the market is, like, you are expected to see, like for instance, when the market is coming to this place, it did not respect this place at all, as if there is a breaker, there is another block here like this. It just break it impulsively. So that is no more a what? An order block. It will now turn to a what? A breaker block. So that is what breaker block is all about. For instance, look at here now. So the market did not respect this place at all. You just break it impulsively, bam, without respecting that place. So that place will now serve as our potential for sell instead of for buying. You understand? So that is what a breaker block is all about. You understand? Sorry, I'm replying somebody. So that is that about breaker block. Now, what of fair value gap? Let me still explain more about fair value gap for you. So you see fair value gap. Let's say I'm considering three candles. You see, this is an impulsive move. This is an impulsive move. So once you consider candle 1, candle 2, candle 3. So this candle started here, this one ended here. So you can see that there's a whole lot of gap here. Here too, you can see when the market was moving impulsively, it formed one candle. This is the third candle. You can see that in between the second candle, there's a whole lot of gap there. The color of the candle doesn't matter, but you should be using the one that impulsive moves. Just be looking for impulsive move, then consider three candles that did the impulsive move, and you see that okay, there's a gap here, there's a gap here. You understand? If this one doesn't matter if it is a red candle. This one doesn't matter if it's a red candle. You understand? As long as you were able to see that okay, there's a gap here. So that is what fair value gap is all about. Do you understand? So now, for another thing that I want you to know is that most of the times they always say order block is for reversal. You can see that the market was going up. Then when market came back to this place, what happened? It reversed back up. You understand why fair value gap is for continuation? That is, as the market is hitting the fair value gap, is going back up. Do you understand? So that is it. I'm looking for an example of a breaker block. I'm looking for an example of a breaker block so that you understand what I'm trying to say. A breaker block. Here I see an example. Breaker block. So to see breaker block is not always like every time. The one that you just need to know very well is this order block, and I've explained it very well for you in a way that you understand it very well. You understand? So breaker block is not always all the time. So breaker block, for you to even use breaker block, is like it means that maybe you've already taken a stop loss already. You've already taken stop loss already on your trade before you can now say okay, let me now say breaker block. Let me see if I can see example on, but when I search, let me say breaker block. Let's see if we can see example of breaker block. I've seen one. Okay, this is not it. Okay, I've seen one. See this. Let's look at this. So look at breaker block now. You can see there's a break of structure here. You've seen the last green candle is your what? Or your normal order block. Do you understand? For you to short the market. So you are expecting the market to go back to this point so that the market will short. Now you now get to a point that the market did not respect that place at all. The market just break through it. So therefore, you will have made a loss on this. You understand? But you know that once the market is coming back, this one can serve as a what? As a avenue for the market to keep on going up. You understand? Because the market has already shown that it's going up already. So you can use this one to join the buy. You understand? So that is what breaker block is. It's not every time that once your order block failed, it turns to breaker block. No. You have to know something, that there must be like the market will come to that place and the market will just break it impulsively. You understand? There must be that impulsively there. That is, the market did not respect that place at all. Look at this is a break of structure. You've seen that there is a break of structure here. There's a fair value gap here. There's another block here. Like you've already identified everything for a normal order block to occur. Then you see that the market just break that place without respecting it. You just break it impulsively. Then you can say, okay, that's a breaker block. So you are now going to set your entry. Instead of the sell, you are now going to place a buy for you to enjoy the buy. Do you understand? So that is what breaker block is all about. I'm sure you now understood it very well now. So let me still do so like this. Normally you already know that, okay, for me to take this trade, there must be a break of structure. There was a break of structure. Now there was an impulsive move, and I can spot that there is a what? There is a fair value gap around this place. You understand? There's a fair value gap. So now the last red candle that was printed before the impulsive green candles that created. So that is my what? My order block, right? So you've already placed your long trade. You are waiting for the market to come and pick you, and you enjoy the profit. You understand? So you've already set your stop loss, everything. Then when market was now coming, the market now come, it cleared the fair value gap, of course. You understand? Then when it comes to this place where you are expecting the market to come tap here and bounce back up, the market break it impulsively. It break it impulsively without mercy. So me showing that what you will have made a stop loss here. You understand? Meaning that what, if before you can say this is a breaker block, it means that the other block is valid. Everything you need to look for in the other block is valid. But when the market was coming, the market just broke it impulsively. That is, just go through it as if there is nothing there. That's when you can now say, okay, this is now a breaker block. So because it has broken it impulsively, then you can now wait for the market to come and tap this place again. Then you now made your profit. So instead of long here, is now short. You will now be shorting at this particular zone. So you'll be shorting here. Place your stop loss a little bit below the rectangle, above the rectangle, then you short. You understand? Same thing for buying too. Same thing for a bullish breaker block too. That is, you want to use it to long. So the market was going up, came down, it went up, came down, right? So now you are expecting the market to clear the break of the fair value gap that was created and enter your order block so that it can continue going up. But it did not do that. Instead, the market break this place impulsively. Once it break this place impulsively, it's telling you that what? This is a breaker block. You understand? So here, you're expecting the market to come and tap you, and you're expecting the market to tap you. You're expecting, because there's a break of structure here already. There's a break of structure here already, right? There is fair value gap that was created because of those impulsive moves. You understand? Then what happened? The market came there. It cleared the break of structure, the fair value gap that we know. You understand? It's supposed to enter this place and the market will sell, but instead it break through. So once you see something like that, that is telling you that what? You should long the market, because the market has already changed from downtrend. We are now in what? In uptrend. So you set your stop loss. You place your stop loss a little bit below the rectangle, then you long. So that is that. So I hope that by now you understand what order block is, you understand what breaker block is, you understand what fair value gap is, and you can now understand this SMC very well. So those are supply and demand zones that we use in what? In SMC. You understand? So in our next video, we are going to do more examples, more live examples. I've shown you 2 live examples. You understand? We are still going to show you more live examples. You understand? Then we move to what? To position sizing. You understand? And risk management as a trader. I think we are almost done with the course. So if you've gotten to this place, you've actually done yourself a good. So I think we've covered other blocks. We covered break of structure. We've covered fair value gap, and I even added some other things too, like supply and demand zone, breaker block, and so on and so forth like that. So thank you very much, everybody. See you in the next class. So in the next video, we are going to be talking about risk management in crypto and also risk management in Forex, or we can talk about more life examples. So see you. Bye.